What's up, everybody? Michael Silva here. How you doing? Hope you're doing well. You're watching the Stock Market Brief Show. I tell you one thing, the market, it is walking on pins and needles. Very weird price action in multiple different asset classes today. We're going to talk about that in today's episode. It's going to be shorter and to the point. Timestamps are going to be in the description below. Let's get into it. Welcome back. We're looking at the market dashboard here. How did the market perform? Well, unchanged. The market didn't do much today, but underlying, if you peek behind the curtain, some interesting stuff took place. So let's take a look at the 11 sectors over here in the S&P 500. We have utilities leading the way. That's a defensive sector, which is weird. We saw rates rise at a pretty rapid rate, which we'll get into here. So utilities up 1.32% on the day. We have energy also was a very top performer there. And then towards the bottom, we had healthcare materials. Even real estate was up there, which is interesting because the 30-year yield, we saw a little bit of a move there. And then financials too. Financials is down here at flat, which is weird because financials typically do good when the yield curve steepens. And we saw that today. We saw yields rise, and 30-year rose at a rapid rate over the 10 and the 5. But yet the financials, well, I don't know. It's like something's weird going on. But let's take a look here at the XLU over the SPY. This is the beta rotation strategy design and written by Michael Gayad. I've interviewed him on the channel a couple of times. If you haven't read his white paper, he explains this. But you can see here, it's the rate of change is turning up, which favors utilities, but it's not going through zero yet. Still got a little bit of a distance, and you see the relative strength line here also turning up slightly here. And that's just because utilities, well, they had a good day. Is that a start of something? I don't know. I just wanted to look at a couple utility stocks, and I wanted to share one with you. Here's ticker symbol CNP. You can see here, looks like a little inverse head and shoulders or a VCP type pattern. You can see some volatility here, and it's contracting, and we're kind of breaking out of that. So, I mean, if you're looking for potential utility plays, I know that there's a lot out there, but I found this one, and this one looks pretty good overall if utilities wants to continue to perform. This one was up 1.32% on the day. So we'll see if utilities get any traction. Oil, nice hammer candle here, and it's still holding relatively, nicely up in this area. You can see it's just a period of consolidation. It's in a range from 85 down to around 78. The 50-day keeps continuing to rise up here, which is good. So if this little hammer candle wants to start bouncing here, energy sector could be doing pretty well. So I'm going to show you a couple of stocks. I typically show these just to the community, but every once in a while I want to drop some to everybody that doesn't join the trade ideas. But here's CPE. This is a well-known one. As you can see, a big cup with handle right here, and it's broken out, but it hasn't really kind of accelerated. And you can see a nice big volume pull here, and the volume's a little bit drying up. Today, we saw a pretty solid day, up 1.64%. But if we start cracking through this high, and oil also continues to rise here, this could be the early start where we can tag 70, probably in a quick hurry, which is, $5.50, per share move right there. So, that's one to watch. These are very volatile, but they could be, very rewarding if, catch the right side of it. And another one is SM Energy. This is an exploration and production company. And I just want to call out here, price pulled right into the 20-day moving average. And, it's holding at support right now. And the run-up here, we saw that nice big volume, and it's kind of been sinking off. The MACD is, a little bit of a bearish crossover, but, it's moving up. It's a bull trend right here. You can see 20 sloping up, 50 sloping up, 200 sloping up, pulls up, pulls back, pulls up, pulls back. Potentially we come back to retest this previous high here, which is, $5-ish move right there. So it's pretty good looking. So this is why I talk about what's being weird is despite the markets being relatively flat, I mean, look at what the dollar did. The dollar, that was a huge move today in the dollar. I was watching that pretty much throughout the day, just continuing to watch it just climb and climb and climb and climb and climb. Meanwhile, the S&P 500 just was compressed and held down. So this is just very interesting because this typically has an inverse correlation with the equity markets and even commodities. And we're just not really seeing that right now. And I feel like something probably will happen. And when it happens, it'll be sudden and very quick. So I continue to say, you need to be careful in this environment. And just take a look at gold. Gold, it was down $1.90. All right, a little bit of a hanging man type candle, but it's consolidating here and it's still above 1840. And that's despite a dollar that's rising here. So maybe gold is getting its shine back for that inflation hedge. I can't tell you for certain right now, but what is interesting is we're starting to see, some weakness in Bitcoin and crypto. We're seeing a strong correlation with crypto and the S&P 500, but yet gold's kind of like stepping up right now. Is it going to be holding this 1840? I'm not too sure. And I'll be honest with you, once we go through the indices here, the price action doesn't look too bad, right? It doesn't look bad. It actually looks pretty bullish overall. So we'll continue to go over that here in the minutes to come. The VIX, the volatility index, we gapped up through the falling wedge, little tight falling wedge that we talked about yesterday, and I just redrew it out. Okay, that's all I did. And what we got here is we have a gap below us, which I forgot to draw in, and we have two gaps still above us. Okay, if the market wants to continue to press higher, which it does look like it can do, which we'll get into the S&P 500, this would probably just come to fill this gap and potentially tag the lower Bollinger Band. And then we got to still be on the lookout for potentially a quick rip at some point to potentially fill these two gaps above us. Now, if you take a look at yields, we still have an inversion between the 20 and 30. And you can see the 30 rose pretty rapidly today, which is the black line, sorry. The 10-year rose quite well today too as well, 3.16%. The 5-year, not as much, but it was up on the day. And then we have the 3-year down here, and you can see the curve of the 30 and the 5 did steepen. I don't have the 10 and 2 up, but that probably steepened as well. And if you take a look at the yields, okay, look at the TNX, this thing looks like it's about to explode. And you gotta wonder if this thing takes off. I mean, it typically puts pressure on tech stocks, and the S&P 500 cap weighted index, the biggest players are all tech. So if those start to see weakness, I mean, what's that going to do for the S&P 500? It's a very interesting time right now. And if you take a look at the 5-year broke out to a new yearly high, and its highest point since early 2020. And it broke out of this bottoming pattern, still continues to rip. Just crazy. It's got crazy stuff going on. And now what I find interesting, despite the yields rising and the curve steepening, if you just take a look at the regional banking, or if you look at the BKX, or if you just look at XLF, the financials, they were unchanged. They didn't even move. They didn't budge. They didn't do anything. But I will say it doesn't look bearish. So there's a possibility here. We have potential VCP pattern right here where you come down. It's getting tighter and tighter. So if we start cracking above 75, this could be a very big opportunity. But you need to proceed with caution here, because the fact that they didn't move despite what the yields did today, part of me says, okay, well, if that's the case, maybe the market doesn't quite believe what's taking place right now. It's a very hard thing to predict. It's a very hard thing to determine, but you still have the opportunity to set trades as long as you're managing your risk. This is the 2-hour time frame, looking at the 20 and the 50 EMAs. So if it breaks out above 75, yeah, you can enter, and you can have a stop loss below the 74 range or trail the 50 EMA on the 2-hour time frame, and then you have a decent risk to reward setup, especially if this continues to take off. Let's look at the S&P 500. Okay, S&P 500 gapped up and just basically stood there all day, came down, bounced up. Finished down 0.05 on the SPX, but the SPY, well, we had to jam that one up, right? Up 16 on 0.16 on the day, and we're above the 20 and the 50 EMA on the 2-hour time frame. They're both sloping up still. This doesn't look bearish. It doesn't. Okay, so if we start cracking above this previous high candle right here, which is 678, 679, that range, I don't have it on my chart. Well, then I think that we head higher, and I can show you that here closer on the 15-minute time frame. Descending broadening wedge. We talked about this being the neckline. Well, we gapped up. Early morning sessions, there's a lot of volatility, so don't be too shocked to see this gap up and then just roll itself over and then kind of stay there. It held the 5-day moving average, right? It held right there as support. Boom, we bounced up, but the potential for that inverse head and shoulder that we've been discussing is still there, which would take us to all-time high territory. New all-time high territory. Now, this is the S&P 500 heat map. And just notice that the S&P 500 was rather flat on the day. All right, well, what else do you see here on this heat map that was rather flat? Let me give you a hint. If it's grayish, it's pretty much flat on the day. You get it? All the big stocks, Microsoft, Apple, Google, Amazon. Tesla was down on the day. Facebook was up. All right, so the big names, they were unchanged. And the S&P 500 was unchanged. You can see here, yeah, utilities was up great, but did that do anything? No, not really, right? Not for the S&P 500. Let's go into the Nasdaq 100, and you can see here, all right, this is the same exact heat map. This is just the Nasdaq 100. You can see NVIDIA a little bit better, right? I think, right? Yeah, a little bit better on NVIDIA, down on the day, right? Tesla was down on the day. If you take a look at the daily time frame, unchanged, really. I mean, down 10.77 points, right? Still at the upper range of this channel. PPO looks like it potentially cross over, but it's still above the 20-day moving average, the 50, the 100, 200. All these key moving averages is above. If you take a look at the 2-hour time frame, does this look bearish? Answer, no, it doesn't look bearish. Okay, so if we start cracking through this high, which is very similar to the S&P 500 chart, well, why does this look similar to the S&P 500 chart? It's because the S&P 500 is made up of just the big stocks in the Qs, right? In the Nasdaq 100, that's pretty much it. They're designed to just keep on trucking up at some point, you know? So it's still holding a very, positive, bullish momentum here since the 4th, right? It tagged the bottom and it's been trucking up. MACD looks like it wants to cross over to bullish. So if we start taking out this, yeah, we head higher. And if you take a look at the 15-minute time frame, there's this downsloping trend line that we can potentially watch out for. It held the 5-day moving average. The 5-day moving average, the short term, it is declining. But overall, if you look back on the chart, the left-hand side, it's still inclining right now. So we got to hold and break above this, and that would be pretty bullish. So where would we need to crack? We need to get back above 396 and actually hold that. That would be very positive for the Qs, and we'd probably see more traction. I don't have a chart of Amazon, but Amazon chart, big shooting star type candle. I should have brought on the FANG stocks. Maybe we'll do that tomorrow. But the PMO here also crossing over to bullish. So this could be setting itself up for a little move higher here. You just need to be patient and wait for confirmation, because if you don't wait for confirmation, you just might catch yourself right into an area of resistance and then kind of just drizzle down. Russell 2000 was the worst performing, I believe, indice for the day. Let me actually double check here. S&P, small caps. Oh, no. Doesn't have the IWM on that little list. Well, small caps here on the S&P 600, they were actually up on the day. But the the Russell 2000, down almost 0.5% on the day. So still relatively unchanged, pretty bearish looking candle, right? We gapped up and we rolled over. But it's still consolidating, and we're still above the 20-day, and we're still above the breakout zone. All right, so there's nothing really to sweat here. It's consolidating. That it is what it is. So we need to have it consolidate and get more data. And once we have more data, we can present ourselves with trade plans. Now, if you look at the 2-hour time frame, it's below the 20-day. So this one's a little bit more bearish looking. Overall, still in bullish context, right? We're still above the 50 EMA. So we want to start getting back above this 241, 242, and that would be a very positive sign here for small caps. MACD would also want to start to see this curl back up and not really get below zero. So we start to see this curl back up. That would be a good sign, especially if you're looking to hedge long some small caps here. 15-minute time frame, we are below the 5-day moving average. All right, so we tagged it today, acted as resistance. We came down, almost doing this dead cat bounce. If we start cracking down through this 237.50 to 237, that could present us a little bit more downwards, pressure, especially if we start cracking through this 236. All right, so we need to recapture this zone, recapture the 5-day moving average to be a little bit more bullish here. Let's take a look at crypto quickly. Now, Bitcoin, it's getting some weakness, right? So we cracked above this previous 65,000 high. We cracked above this. We could not hold it, and then it reversed on itself today. And unfortunately, that's right there, a little bit of a bull trap taking place. Not looking too hot right now for Bitcoin, and we talked about the Sailor to Shift rotation tool on Friday. I'll bring that up here in just a moment. If we take a look at Ethereum, which, by the way, if we're looking at resistance now and support, it's going to be this little tag level, which is just above 62,000, 62,200, that zone where there's previous resistance, and then we broke out. So we got to hold this area. Would be very positive for Bitcoin, but right now this thing is just kind of just heading south. So heading south for the winter. Ethereum, also big moves to the downside. These are 2-hour candles, right? So big red candle, another red candle, another red candle. We're breaking through these previous lows. So, got some traction to the upside, but it's, somewhat of a bull trap. It's getting reversed here, back below the 20, back below the 50. And sometimes you can actually look at like Bitcoin, and sometimes it leads the S&P 500 a little bit. There's been really strong correlations, but sometimes you see this like 5 to 7 day lead time where like Bitcoin actually found, let's see if I can actually show you this. So Bitcoin right here, it found its bottom, and then shortly after, oh, you know what? No, I need a drawback of a farther chart, so I can't show you on this one. But when the S&P 500 was rolling itself over, so I can show you that. when the S&P 500 was rolling itself over to here, Bitcoin found its bottom before the S&P 500 and made its rally up higher, which was very interesting because it led like about 5 to 7 days the S&P 500, and now we're starting to see the Bitcoin roll itself over, which could be, giving us a warning sign that we might see some more weakness up ahead. But the price action still, it doesn't quite match that bearish narrative. Now, if we take a look at the Bitcoin to gold ratio, the Saylor to shift ratio, we are on a sell signal still. But what I forgot to interpret was at the end of the week, I looked at the chart and it was down below zero. However, one of the Twitter followers reminded me that the weekly candle closes for Bitcoin on Sunday. So actually, we didn't close the week. Technically, we closed the week because gold closes. We're below zero on the Saylor to shift, but because the candle on Bitcoin didn't close, it technically didn't bring the indicator below zero. But we're there. It's heading down, and we're seeing that weakness. So it's just something that you want to still be careful for. You can have a stop loss below this candle. You can have a stop loss below that candle if you want to protect yourself. Because if this starts turning up, then this is going to start turning up too as well. That's all I got for you on today's episode, everybody. As always, be very careful out there and have a wonderful night.